and welcome to a very special and urgent edition of Indianomics. The Reserve Bank on Thursday announced that banks and NBFCs have to set aside more capital to back unsecured loans, that is personal loans and credit card loans, which don't have collateral. Now, the words the RBI uses, the jargon is that risk weights on these loans has been upped from 100% to 125%. Basically, it means 25% more capital. Reserve Bank has also said that risk weights on bank loans to NBFCs is being upped from 100% to 125%, or a little more for various other categories. It has asked bank boards to draw up a policy as to how much may be lent to unsecured categories. So it's brought a lot of signalling that unsecured loans should be lent very carefully. Now, what is the impact? Will loans become expensive? Will consumption fall? What's the impact on NBFCs? For a many-sided discussion, I'm joined by the biggest name in banking, Mr. Dinesh Khara, Chairman of State Bank of India. He's joining us all the way from London, and it's early morning of there. We are deeply grateful. Also joining us is Virat Diwanji, the Group President, Head Consumer Banking at Kotak Mahindra Bank. Mr. Krishnan Sitaraman, the Senior Director and Chief Ratings Officer at CRISIL Ratings. And in a bit, Mr. Umesh Revankar, who is, of course, Chairman of Shriram Finance, but who also heads the FDIC. So, in a way, he is speaking for the NBFC sector. Gentlemen, thank you very much for your time. Deeply grateful to you, Mr. Khara, for getting up early for us. First, sir, what is the immediate impact of what the RBI has announced? Will your loans to unsecured borrowers and to NBFCs become expensive? If yes, by how much?
Well, I think the most important component is that the risk weights have been increased from 100 to 125% in case of unsecured loans. But I would also like to mention that pre-COVID, this was actually 125%. During COVID period only, it was brought down to 100. And now they are back to 125%. So that is one of the major aspects which has to be kept in mind. But also at the same time, the concerns which are being raised by Honorable RBI Governor relating to the growth in the unsecured loan in the system, I think to that extent, this effort is to ensure that the system stays insulated from any potential risk. That is the reason why perhaps this risk weights for the unsecured loans have been increased, and also the lending to the NBFCs also, in whatever rating they are, it has been increased by another 25 basis point. But so that's how this is all. This is the broad import. So how does it impact for a bank like us? We made some back of envelope calculation, and our assessment is that as far as the unsecured loan book is concerned, it will have an impact of about 30 basis point on our, as far as the capital adequacy is concerned. It will consume more capital for the same level of loan book which we have. And when it comes to NBFCs, it would be, we expect it to be somewhere around 20-25 basis point. So that is how it is going to impact as far as the capital consumption is concerned. While saying so, I must also mention that if we, just to give a comparative, it is, we look at our half-year profit, so which has actually added the capital adequacy to the extent of about 109 basis point. So I would say that even today also, irrespective of the increase in the risk weights which have been announced by the government, it will probably have a situation where we'll have sufficient room to support the this existing book as well as to support the growth going forward.
Okay, that's good to hear, sir. But can I just get some details out of the way? Many brokerages have written us notes, and they say that your capital gets eaten up to about 58 basis points. Is that a fair calculation? You were 12% tier 1 and now you will become 11.4% tier 1. Is that ballpark correct?
No, this is what I was mentioning, that 30 plus 25 is what my estimation.
Yeah, 55, yeah.
55 basis points. Okay. So it could be 2-3 basis points, 5 basis points here and there. Okay. That could be there. Okay. But the point is that as of now, we are not really accounting for the profit which we have earned in the first half in our capital adequacy.
Yes.
So my only point was that if at all we reckon that, then we actually go up in terms of capital adequacy by about 109 basis points.
Yes.
So as compared to that, this new guideline will consume our capital to the extent of about 55 basis point.
Fair.
So we are still comfortably placed, and in any case, we have got our plan of action for raising tier 1 bonds also.
Okay.
So that is much on course, and we'll be in a position to raise that also very soon.
You answered the next question I had in mind. Will you be raising capital? You will be raising tier 1 bonds. People were wondering if you will also divest in any of your subsidiaries. No such plans now?
As of now, no such plans, because these are, as of now, we have nothing on cards for all those subsidiaries.
But your loans to NBFCs will become expensive by how much? You will raise it by about quarter percentage point, ballpark again?
We will work it out, because it will depend upon the rating of the NBFCs and the unrated NBFCs, because there's a differential treatment which will be there.
Okay.
So accordingly, we'll work it out.
Okay.
So it's still early. We have not done that kind of a calculation.
Okay. So I'm just coming back to you on the impact on the macroeconomy. But Mr. Umesh Revankar is there, and he represents the FDIC, the broad set of NBFC companies. Mr. Revankar, good afternoon to you. You're joining me from Singapore, and thank you very much for sparing the time. What's your sense? Do NBFCs face a double whammy? Cost of funds become expensive because banks will charge you more, and you have to keep more capital. Are we right?
Yeah, by and large, it looks like that. But most of the NBFCs are well capitalized. I don't think there's a hurry right now for increasing the capital. But yes, bank lending to NBFC becomes a little expensive. Then we need to pass it on to our customers, because typically NBFC work on certain margins, and we immediately pass it on to the customer, because we are most of us are in niche segment. Being in a niche segment, passing on becomes easier, but the growth momentum can slow down because of this. So there could be lesser demand and the growth can come down. But I would like to highlight here is most of the NBFCs, they are into lending into business or not for consumption.
Yes.
The consumption loans are very small portion of NBFC lending. So if you take that as a factor, I think NBFC may not be directly impacted, because most of the lending goes into for business or acquiring asset, or for improving the business through working capital. So I think RBI is focusing more on the consumption loan, which probably they feel that it's getting overheated.
No, I take your point, but I think you're speaking more for yourself. Some brokerages, I think Morgan Stanley report said that you are only 4% of your loans exposed to personal loans and consumer credit. But that won't be the case for Bajaj Finance, which has a little more. SBI cards, 100% is unsecured. I mean, they have to keep 125%. So first, my apologies to Krishnan and Virat. Since you are in Bombay, I'm taking some liberty and going to people who are at unearthly hours obliging me. Mr. Khara, on that point, sir, since companies like SBI caps and generally in credit card, the capital becomes more, do you see a slowdown in consumption?
See, over there also, our capital adequacy ratio is somewhere around 22% plus.
Yes.
So even if we reckon this impact of 4%, we would be somewhere around 17.5 to 18% kind of a number. So I would say, because as far as the regulatory prescription is concerned, it is at 15%. So again, in that company also, we are also evaluating the option of raising tier 2 capital. So I think that is something which will be depending. We'll make an assessment of what is the growth plan and what is the additional capital required. So even that also will be addressed. So I would like to say that as of now, despite the increase in the risk weights, the credit card company also has got adequate capital adequacy ratio to support the current levels and also to really support the growth in their business. But however, since we were keeping sufficient cushion in the past as compared to what the regulatory prescription is, we will be shoring up that through either tier 1 or tier 2, depending upon how what will be the requirement.
No, that's for SBI cards, but I'm more asking you the macro question. Do you sense that consumption will slow down a bit?
See, essentially, the consumption slowdown will depend upon the cost of credit at which these kind of loans are being made available. So there also, apart from the base cost, there's always a risk premium depending upon the risk rate in which the borrower is. So that is also one of the consideration. But I think what is being attempted through RBI is that indiscriminate lending for consumption should not be there. It should be essentially to those who are well-rated entities. And that is something which is being attempted in this whole process. I think I don't expect that it will have a I would say that when it comes to the healthy consumption, it will not have any major impact. And more so, the major drivers of consumption, which is essentially education loan, home loan, etc., they are all exempted from this one. So I think they are the major drivers for growth in the economy in any case. So I expect that it will continue to grow as they were growing in the past.
Oh, no, absolutely. Housing loans, realty is on an upswing. So that's not been affected. And like you say, car sales had done so well in October. That's again not affected, as you point out. Virat, I wanted to put the same question to you. While I agree that cars and homes are not affected, there was a lot of, unsecured retail. I think Deputy Governor Swaminathan read out some number of 23% of retail loan growth and 30% of unsecured loan growth. So somewhere consumption will come down, you think? Virat?
Definitely. It will have, because as what you call, if the cost of loans go.
Okay.
Can you hear me?
No, I think we have a problem with the line. Virat, I'll just ask the studio to fix that. Let me get to Krishnan. Krishnan, thank you for your patience. Is anyone constrained to lend now? What do you see as the main impact? Loan volumes, I mean, I think RBI's last Friday number was some 15.5 or something credit growth. Does that come down now to 14 or something?
Yeah, good afternoon, everyone. Thanks, Latha, for having the show. Now, this entire risk weight increase, I don't think it's come as a surprise to the wider market. The RBI governor in the last monetary policy had also called it out. And as Dinesh was mentioning, even before COVID, these loans, the consumer loans, were going at a risk weight of 125%. It had come down, and now we're going back to status quo. And a significant portion of the retail loans are out of the ambit. Like, for instance, housing loans, vehicle loans, education loans, gold loans. For NBFCs, microfinance loans are also out. So if you look at the overall part of the retail book, which will be subject to this credit of the banks, which will be subject to this higher risk weight, that is roughly 30%, or it will be some 8-9% of the overall loan book. So if you look at individual banks, the amount of capital, additional capital that we need to keep is not very substantial. I would say that this particular guidance or this particular circular is more towards proactively recognizing the potential risks which are there when unsecured loans build up, and have adequate guardrails in place so that we don't have potential future asset quality.
Of course.
And you have adequate capital to manage that. In the past, where we have seen high growth in certain sectors, it has been followed by NPA increases. Okay. So I think today that's a proactive step to do that. Point. Some impact may be there in credit growth. Our projection for credit growth for this fiscal for the banking system is somewhere in the range of around 13.5%, which is somewhat lower than what we are seeing in the current run rate.
Okay. Well, I know the bankers and the NBFCs have capital constraint. I have a commercial break constraint. We will make it a very short break, sir, but we are back in a jiffy. Welcome back. The Reserve Bank has made personal loans pricier by changing rules. On Thursday, I've been speaking with Chairman of SBI, Dinesh Khara, Mr. Umesh Revankar of Shriram Finance, Virat Diwanji of Kotak Mahindra Bank, and Krishnan Sitaraman of CRISIL. Gentlemen, thank you very much for your patience. Mr. Khara, two very quick questions on possible impact on asset quality. What the Reserve Bank seemed to be indicating is that people are taking one loan from one NBFC, paying another because they are overdue or over-leveraged. There is this round robin going on. So if the penny drops, do you think there can be some increase in GNPAs in some quarters?
See, the issue involved is when it comes to the NPA status, I think different lenders are having different practices in terms of evaluation of the credit risk.
So for the system as a whole?
For the system as a whole. So that is something which is the deciding factor here. But I would say that since, the NBFCs, banking system, all are subject to oversight by RBI. So there is a very conscious effort on the part of the Reserve Bank of India to ensure that the system for evaluation of the credit risk should be robust. That is the effort. So I think, yes, of course, when it comes to, somebody is trying to pay off the loan by raising another one, which is more like a Ponzi scheme. Normally, now the system is quite cognizant of the fact that they look at the EMI, NMI ratios. They also look at the loan to value, etc. for the assets. So I think the practices have streamlined quite a lot, have been strengthened quite a lot over the years. And all lending institutions are quite mindful in terms of the quality which they're underwriting. But of course, at times, if at all they are diluting those standards, they need to have very strong collection mechanism on ground. So this is how it really works. So I don't really expect that it should have those kind of ripple effects and could have any kind of scare for the system overall.
Okay. Similar question to you, Mr. Revankar. One, can there be asset quality as over-leveraged borrowers find that no one is giving them a new loan? And secondly, will NBFCs have to take a little bit of hit on their margins? Because you're already charging maybe some people 18, 20%. How much more can you push it up? So margins, asset quality.
Yeah, first of all, I feel the NBFCs will be very cautious about dropping their margins. They will try to maintain the margins. And that's so because that's the cushion against any kind of increased credit cost. That's one. And as far as the multi loans to individual is concerned, I feel it is a phenomena that is happening mostly on what call digital lending, where we do not know the end use of the loan. So that is somewhere I think that area is which I feel both NBFCs and the bank need to be careful, because some of this the loan can be on the book of NBFC and the bank, and we need to be carefully address that. See, I think most of the established NBFCs and banks are mindful of it, and they have a reasonable control on that, because today everybody is collecting the data from the bureau. So I don't think there is a scope, but still there could be something. So we do not know. And I feel personally there may not be much, but if RBI is talking about it, they must be having certain data on this, and they must be talking because of that. So we do not know what has made RBI to be extra cautious on the same.
Okay. Well, a similar question to you, Virat. I'm not just asking for Kotak Mahindra Bank. As an observer of the scene, will the penny drop in terms of fintechs? Will it be, equity derivative volumes have been going through the roof. So are you expecting trouble in any such quarter in terms of higher asset quality problems?
Look, at this stage, it does not appear so, but in terms of the way in which the lending has happened through the fintechs, and where perhaps more of the algorithms are being used, perhaps that's where, and that's a segment where the lending less than 50,000 has been growing, is an area which is concerning RBI, because there, even the cost of collection is prohibitive.
Yes.
So from that perspective, that segment will certainly everyone will become extra cautious on those ticket sizes. That is one. The second thing is how much of it is used for consumption. We were discussing this earlier, the consumption loans taken through a PL route will certainly see a decline in that sense, because the lenders will be more cautious as to for what purpose this loan is being taken.
Yeah, that's the point, because we just spoke with the Blue Star managing director, and he said that 50% of the ACs are bought on a BNPL kind of route, that is on credit. So, I mean, if it's an expensive credit, will that hurt? Actually, running out of time, can I have two important takeaways each from all of you? Krishnan, two important takeaways in terms of impact.
Yeah, I think there will be some increase in capital requirements, but that will be very much manageable for the banking sector. They're very well capitalized today. On the NBFC side, there may be some divergence with, say, the vehicle finance having very marginal increase, and entities in personal loans and credit cards are somewhat higher increase. But there again, the capitalization levels are strong. The other key aspect is this is a measure to proactively recognize potential risks and have adequate internal surveillance mechanisms and guardrails in place, so that it's a proactive measure against future potential risks.
Okay, I am being warned out of time. So, Mr. Khara, you have the last word, sir. Do you think this is the first of more steps, or this is it?
No, I think the kind of concerns which are being expressed by Honorable RBI Governor, so this was one of the major area of concern, and it has been appropriately addressed. And I would only say that I think as the lenders perhaps were all geared up for this kind of an event to happen and for quite some time. And eventually it is for the overall good for the system. So I would look at this measure like this.
Okay, one very quick word, Virat. Boards will become very active. They will ask you all more questions, you think?
Of course, because this will certainly have an impact on the profitability, and hence how much of this increase in price will be able to pass on to the customer. Because if you can't reprice your loan going forward, perhaps the impact of this increase of additional capital will certainly have an impact on the ROEs of the financial institutions.
Okay, I'm sorry, completely out of time, but deeply grateful to you, Mr. Khara, Umesh Revankar, Virat and Krishnan Sitaraman for obliging with your comments and your analysis. Much appreciated. So the key takeaway is most of the institutions are well capitalized, but because they have to pay for that extra capital, loans are going to get pricier, and therefore some consumers may not be able to afford it. Therefore, consumption will have a bit of a setback. And as Virat says, if something is not profitable, banks will not even go there to the same extent. So you should see some kind of fall in consumption, reduction in consumption. That's all we have time for this edition of Indianomics. Thanks much for watching. Do stay tuned. Much more is lined up for you.